We will now look at how to enter data on the Buildings and Improvements worksheet. Buildings and Improvements data includes all those assets fixed to the farmland and used in the farm business. This includes the farmhouse, building site and services including electricity, gas, water, and sewer, the shelter belt, the farm shop, on-farm storage such as machinery, grain, forage, oilseed, fertilizer, and manure, also barns, corrals, fences, and other farm buildings. It is important to list all buildings and improvements, as most farms have a significant capital investment in these assets. Missing this information will affect the quality of economic analysis, as this data is used in generating cost of production summaries of farm enterprises, budget sheets, and economic performance indicators. The Buildings and Improvements worksheets is one of the key data entry worksheets in the AgriProfit's Accrual Adjusted Cost of Production framework. The non-cash costs are calculated differently for leased buildings than owned buildings and improvements. You need to enter that information separately in two different tables as shown here. Where can you find the Buildings and Improvements data? There are several possible sources. First, the fixed assets listing that is normally prepared by accountants. If a fixed assets listing is not available, other sources of Buildings and Improvements information include a farmland appraisal that lists the buildings and improvements with their appraised market values, a certificate of property insurance, or a statement of assets and liabilities as provided to lenders. For leased buildings, the assets lease agreement is the best source of data. Now let's learn how to enter the Buildings and Improvements data into AgriProfits, starting on the Owned Buildings and Improvements worksheet. By function, each worksheet is divided into two parts. In this area of the worksheet, the Owned Buildings and Improvements description and cost information is captured. In the percent allocated area, the cost information for each building type is allocated among different enterprises: cereals, forages, cow-calf, other enterprises, and non-farm and personal purposes. The total allocation for each building type must equal 100%. Assuming you have the Buildings and Improvements inventory list in front of you, the producer has valued the main farmhouse at $201,262.50. Choose the appropriate building type from the drop-down list. In this case, the house mobile home. In the description, you can clarify which house mobile home this is. We will enter the main farmhouse, $201,262.50 as the current market value of this house. Now we must allocate the house's cost to the enterprises where the house was used in this specific fiscal year. In our example, the producer allocates the time as 5% for cereals, 5% for forages, 5% for pasture, 5% for cow-calf, 4% for beef dry lot, 1% for beef grassers, 35% for other farm, and 40% for non-farm personal use. What if the current market value for this house is not available? We use the original purchase price and the year the house was purchased or manufactured. Let's assume the original price was $250,000 and the house was purchased in 2010. AgriProfits will automatically calculate the book value of the house and will use it to calculate the depreciation cost. Remember to record all sales, trades, and purchases made within the production year in the Purchased Sold cell of this worksheet. For buildings and improvements sold in the fiscal year, enter sold. For buildings and improvements purchased in the fiscal year, enter purchased. This helps keep your buildings and improvements listing up to date and calculates depreciation on the units sold and purchased according to standard rules, and also according to Canada Revenue Agency rules to apportion depreciation to that year. Any buildings and improvements purchased in the production year must also be entered on the liability worksheet. If you have participated in the program in the previous year, unless otherwise indicated, the buildings and improvements list on file will be depreciated according to standard rates into the next year. Let's look at the leased buildings worksheet. Just like the Owned Buildings and Improvements worksheet, the Leased Buildings worksheet is divided into two parts. In this area of the worksheet, the description of the leased buildings, total leased payment cost, and the start and end dates for the lease are captured. In the percent allocation area, the total lease payment costs must be allocated to appropriate farm enterprises. The total allocation for each building type must equal 100%. Now let's look at an example on the Leased Buildings worksheet. The producer leases a hopper bin with a total payment of $10,000. The lease started in 2012 and ended in 2017. In our case, we choose the leased building facilities from the drop-down list. AgriProfits will automatically calculate the annual lease payment cost of $2,000. This cost must be allocated to the farm enterprises. The producer says 50% of the time he uses the hopper bin in the cereal oilseed enterprise and 50% of the time as feed storage for the cow-calf enterprise. This ends this module. Remember to save your data frequently as you move through the worksheets. If you have more questions, refer to the AgriProfits Help tab, AgriProfits Data Entry Help Manual, or ask AgriProfits staff for help.